I was curious what Caterpillar had to say. They are stuck in the midst of a 3-year bear market for commodities, and up until 18 months ago, oil and energy was the last holdout for their machinery and everything, and that's just not, it hasn't panned out either. So they actually reported this morning, and the earnings were actually pretty good. They beat a little bit, but obviously revenues and everything were down. Revenues came in at $11 billion, down from $14.2 billion in Q4 2014. They reported a loss of 15 cents per share, but they would have reported GAAP profits of 74 cents had they not taken like a $900 million hit from restructuring costs. So, investors really should keep that into account, because any large organization like that, they're going to have restructuring stuff all the time. Like, you shouldn't really take any credence to that 74 cents per share number. But anyway, management talked exclusively about how tough it is out there, and they just went on and on about how they're cutting costs. That's literally like half their call, half their press release, everything.
Yeah, Schlumberger laid off a lot of people, but Caterpillar's been laying off people for a couple of years now.
It's getting hairy, yeah. And of course, I was really interested in what they thought about their 2016 outlook. They do not anticipate any bounce back in any. They're obviously not just in oil machinery. They do copper, all the mining machinery and everything, and they are not expecting an improving demand picture at all for their equipment. They call for sales and revenues of around $42 billion, and GAAP earnings per share, I was happy to see this, of $3.50 per share. So
not the worst in the
not
world.
bad.
What was it this year? I think total year was somewhere in 4 and change.
Yeah,
so
4 and change. So
it's not the worst in the world. So obviously Caterpillar is a cyclical business, just like everything else here, and we'll probably see a little bit of a lag on pickup on equipment, similar to like we were talking about with drilling activity, where they're probably not going to be buying any new equipment until prices go up.
Got to pay your bondholders back first.
pay the debt and stuff like that. But at today's prices, if we're looking at, as a long-term investor, is their value kind of baked into shares nowadays, or do you think maybe hold off?
And that's when I went into this, because I'm like, we're at the bottom of the cycle. Things are getting really bad. Maybe it's a buy now. They're trading at $59 and change this morning. It's up like 1.5% on earnings. It's down from I think 110 a year ago or something. It's 52-week highs, well over 100. But you heard me say the guidance for 2016, which is $3.50 a share. So they're trading at 16 times forward earnings. I think that is more than fair, given we don't know when things are going to rebound. We don't know when earnings are going to rebound. The market multiple is 19 or 20 right now, so I think it's fairly valued.